Somebody tell Gary Gensler to suck an eggplant. I mean, this dude he's the worst. This is what you call when corruption is in high places and they're desperately and, just obviously looking out for their best interests and not the people's best interests, right? Because Gary is, he's in the stocks, he's in a lot of different things, and he's into protecting the traditional markets and especially the banks. So anyway, here he goes. Gary Gensler again warns against investing in crypto as market awaits Bitcoin ETF. That's chair, warns of risks in crypto investments, highlighting compliance issues and volatility as several Bitcoin ETFs await SEC approval. So, I noticed that the altcoins dipped pretty significantly yesterday, and I'm assuming it's because a lot of people expecting that the ETF will be approved, and they're probably liquidating some of their alts to double down on Bitcoin, which makes sense. And we see that Bitcoin now is pumping at almost 47,000. But with at least 11 Bitcoin ETFs pending approval by the U.S. Securities and Exchange Commission agency, Chair Gary Gensler warned investors, that was not fluid at all, about investing in cryptocurrency on Monday. So that's today. Those offering crypto asset investment services may not be complying with applicable law, including federal securities law. So we've already established that Bitcoin is not a security, XRP is not a security. So this is just pretty much classic FUD. Investors in crypto asset securities should understand that they may be deprived of key info and other important protections in connection with their investment. In December, Gensler said the SEC would take a new look at Bitcoin ETFs. BlackRock, Grayscale, ARK, iShares, Bitwise, VanEck, Wisdom Tree, Invesco, Fidelity, and Franklin have ETFs under review. So we know that these ETFs, everybody's anticipating them being approved. And I'll tell you the truth about these ETFs, man. I'm not that excited about ETFs. I believe that Bitcoin's going to go to at least 150 with or without ETFs. My problem with these ETFs, even though I know, of course, if, ETFs are approved, then all the issuers will probably be doubling and tripling down on how much Bitcoin they're going to buy initially in order to offer the Bitcoin ETFs. My problem, though, is how do we know they're not going to debase it? So, let's say I'm BlackRock and I buy, let's say, 1,000 Bitcoins because I'm ready to start issuing these ETFs. And then let's say after I'm open up for shop and now the ETFs are approved, let's say somebody buys 500 Bitcoin. All right, cool. Then let's say another 500 Bitcoin get bought. Okay, that's cool. So now we're maxed out. But now let's say another 500 Bitcoin are purchased, or Bitcoin ETFs are purchased, right? Is BlackRock going to go and buy 500 more Bitcoin, or are they going to do what most banks do, what most promises or receipts, like gold receipts, do? Are they going to assume that, hey, as long as everyone's not trying to cash out at the same time, we're good, we'll have the liquidity to do so? I don't know. So if they do the latter, then what that means is that there's 500 Bitcoin that someone has purchased that don't really have Bitcoin, and that money's not in the market cap, so you're pretty much cheating the market cap. You're pretty much counterfeiting Bitcoin at this point, and I'm afraid that may be the case. So, but while the Bitcoin ETFs appear to be poised for approval, Gensler said cryptocurrency is still a risky bet. Okay, that's fair. It's fair to say that cryptocurrency in general is a very risky bet because most cryptos are garbage. Most of them are pump and dumps, and only very few of them actually have a liquidity compared to how many of them exist. That is true. However, you couldn't convince me that an asset that almost tripled this year is risky, because you can't really show me too many other assets outside of the cryptocurrency class that have tripled. And, yes, there's risk involved. There's a lot of scams involved. If you're not careful, if you don't understand the fundamentals, then, you will leave yourself at risk. But, I think that this is just more of the, here we go, look at this. Investments in crypto assets also can be exceptionally risky and more often volatile. Gensler continued on Monday. A number of major platforms and crypto assets have become insolvent and or lost value. Investments in crypto assets continue to be subject to significant risk, he said, alluding to cryptocurrency exchanges and companies that have collapsed, including FTX, Terraform Labs, and Voyager Digital. That's all fair. But what about the banks that collapse? We've seen 3 of the biggest bank collapse in history of the United States happen in 2023. Of the 7 biggest bank failures we've ever seen, 3 of them happen in 2023. No one's telling you that putting your money in banks is risky. And the only reason FTX really collapsed is because they operated the same way that banks operate. They were doing pretty much fractional reserve. You know what I mean? They didn't have all of the money from all the depositors. They were investing it in other things. They were using it for other things, just like your bank does. All right, so Gensler also pointed out to scams targeting crypto investors in December 2023 report by blockchain intelligence company TRM Labs, said that over 1.7 billion in cryptocurrency has been stolen that year. The 1.7 billion, however, is still less than half of 4 billion stolen in 2022. That is fair. However, if that was really like what they were worried about, there are so many scams that people have been complaining about for years that they have not, that they're just recently getting to. And like even on YouTube, you'll see ads, sponsored ads, that it will be deep fake AI videos of every major cryptocurrency telling you that we'll give you a 2-for-1. YouTube does nothing about it, but they took down my page that was exposing crypto scams. So I just don't buy we're looking out for the best interests of the people. We know that that's not the case. They're looking out for the best interests of the very rich, wealthy, and powerful. And that's why the very rich, wealthy, and powerful, after ignoring or mocking crypto for years, are now doing their best to buy up all of the Bitcoin so they can offer it back to you. Just like the live video I did where I showed you that these same companies are buying up houses, but they're not buying houses to resell them. They're buying them just to rent them. Well, that's pretty much what these Bitcoin ETFs are. They're buying up all the Bitcoin. They're not going to sell it. They're going to give you a receipt, an IOU, Bitcoin. But then when you cash it out, they're not actually giving you Bitcoin. They're just going to give you cash. So they're keeping all the Bitcoin and renting it out so that you may be able to make some money off of it. But remember, they're going to make money too. They're not doing it for free. So when you see a situation where, someone buys a Bitcoin ETF, remember, you're not going to, like, Bitcoin trades 24 hours. So the value changes 24 hours, but you're only going to have access or the ability to sell, trade, to buy your Bitcoin only during office hours. And when you do so, when you liquidate, when you do any type of deal with them, it's going to cost you. They're going to be applying different types of fees other than the fees that would already be applicable for network fees. So just keep that in mind. Anyway, blockchain crypto gang, you guys, we'll look out for some more videos. I'll be getting into some other stories, some things that are going on. We'll see how this Bitcoin ETF thing goes. I was really hoping that Bitcoin would stay down until tomorrow, until my automatic deposit, allocates 35% towards Bitcoin, but it's all good. Like, subscribe, comment, share, all that good stuff. Thanks for watching. Peace.